Hello, everyone, and thank you for reviewing the Santa Clara County real estate market analysis for January of 2010. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors, and I'm also a certified E-Pro. I'm also the president and CEO of Whitelaw & Sons Real Estate, serving all of Silicon Valley. There's a variety of ways of getting in contact with me. Let me lay them out here for you. First, you can visit my website at www.soldbyrobert.com. That's probably the first best place to go. You can get access to a fantastic map-based multiple listing service search tool that covers everything from San Francisco all the way down to Monterey Bay. You'll also get access to these videos and a player at the bottom of the page, and you'll also get access to my weekly podcasts on real estate. Let me suggest you take a listen to those. We talk about topical news and all sorts of information that help anyone who's interested in buying, selling, or investing in real estate, so check that out. You can also find that on iTunes. The name of the show is Real Estate Realities. If you do a search on that, you're sure to find it on iTunes. If you'd prefer to contact me directly via email, just send those messages to robert@soldbyrobert.com. And if you prefer to call on the telephone, just dial 408-852-0525. If you'd rather talk to me online using any of the popular instant messaging applications like AOL Instant Messenger, Google Talk, or Yahoo IM, just use the screen name The Rebel Broker. And for Skype users, the screen name is Rebel Broker. And of course, referrals are always appreciated. If you or anyone you know is interested in buying, selling, or investing in real estate in the Silicon Valley area, I'd be happy to help you in any way I can. And if you're not interested in real estate in any of the areas that I serve directly, I can still help find the right agent for you anywhere in the United States. Go ahead and give me a call. I'll go through the interview process and find the agent that fits your needs perfectly. All right, now let's go ahead and take a look at the supply and demand numbers for Santa Clara County for January of 2010. And as usual, we'll start with the inventory numbers. And this continues the trend we've seen now for quite a while. This has been going on almost for 6 months now with decreases in inventory when compared to the previous year. Now, inventory is actually down 38.45% from the same time last year. That is 1,843 fewer homes on the market in 2010 in January than in the same month of 2009. And that's very good news. That was really the anchor that was holding down the marketplace. A large percentage of those were foreclosures, of course. We've seen a lot of activity there. The total number of homes currently on the market right now in Santa Clara County stands at 2,950. As far as new listings are concerned, this has been trending in the right direction since 2008. We've seen fewer added to the market consistently. Now, the new listings change is actually down 16.89%. That is 269 fewer homes added to the marketplace in January of 2010 than in January of 2009. And that gave us a grand total of 1,324 homes that were listed in Santa Clara County in January. Now, on to sales. This is also heading in the right direction, thank goodness. It is up 8.25%. That is 47 more homes sold in Santa Clara County in January of 09 than in January of 10 than in 09. 47 more homes sold. Total number of homes sold stood at 617. Now, to sort of calibrate you to relationships with these numbers, there are a couple of different ways to look at this, and one way you've probably heard of before, and that is total number of inventory on hand and how long it would take to sell that inventory off. And that's basically the inventory number divided by the total number of homes sold to give us a ratio of the two. And right now that is standing at 4.78. So that's just shy of 5 months worth of inventory. So in other words, if the inventory numbers froze where they are now and the sold numbers sold where they are right now, it would take us just a little under 5 months to get all of those sold, about 4 months and 3 weeks. Now, last month that stood at 2.8. So it's actually that ratio is actually headed in the wrong direction. Now, I tend to put a little bit more stock in this ratio than a lot of other people do. So when it starts heading in the wrong direction, that's a concern for me. We're now back up to 4.78. We had a very big increase from just last month, which is a little bit off-putting, particularly where we are. I mean, granted, this is January. We're in the wintertime months, but this is when comparing it to December. This is a little bit of a concern, but we'll keep an eye on it moving forward and see what sort of direction it heads. The next thing we'll look at is the supply and demand numbers going all the way back to July of 08. So this is just chronologically now. We're not just looking at a single month going back year to year. This is just straight back so that we can sort of see what kind of trends we're dealing with. Now, one great thing about looking at the data for Santa Clara County is that we have such a volume in Santa Clara County that we don't have to sort of in our minds try to compensate for artificial months where maybe one or two properties really skewed the numbers, because since we get thousands of homes involved in this process and hundreds of sold homes, any one property isn't really going to skew these numbers too much. So the trend here is very clear. Now, of course, you get the characteristic winter dip in inventory where folks simply take their homes off of the market. What's interesting to note is the rebound that we see last year. Now, we would expect to see the same thing this year. Notice we saw a bigger rebound this year, though, in the inventory. So we look back to December of 08 and January of 09 and take a look at the December-January transition this year. Now, we pretty much steadily declined in inventory right up to December, and then we saw an increase in January. Now, of course, that's typical. That's what we normally see. But what I'm interested in is the fact that inventory went up by so much more when compared to the previous month. It was a very mild increase from December to January in 08, 09, a little bit more of a dramatic increase between 09 and 10. Now, the inventory changed from month to month. From December to January, inventory increased 11.95%. That's 315 more homes on the market this month than last month. The total listings also increased. But again, look to last year. That's very typical. We usually see declining listings all the way through the winter and through the end of the year. And then we normally see a bit of a boost when the new year arrives. And we've seen that again this year. Now, it's up 48.26%. That is 431 more homes added to the inventory in January of 2010 than in December of 09. And then if we look at solds, we can see the general trend is up, which is good. All of these general trendings are in the right directions for a better market. Now, the number of homes sold declined by 38.91%. That was 393 fewer homes sold in January of 2010 than in December of 2009. So just over 1 month, we saw a pretty substantial decrease. Look at last year. Now, we saw a decrease as well, but we saw a much bigger decrease this year when compared to the previous month. Something else that is a little concerning. Not real sure why that is such a dramatic change. It makes me concerned a little bit about market volatility, about how quickly things change on a month-to-month basis. So again, something we should keep an eye on. And I think one reason why I call these out is because we have an awful lot of homes that are in the foreclosure pipeline that are not on the market. In other words, there's a huge number of homes out there. I've talked to appraisal folks. I've talked to folks at various banks. They are all holding back these foreclosure properties that are not being put on the market. The bank owns them, but they aren't putting them out for sale. So we have a very huge stockpile of properties that are eventually going to have to go on the market, but that aren't. So that concerns me, and I'm trying to anticipate if whether or not any of these numbers are reflecting that in any way. Now let's take a look at the short sales and foreclosures. Now you can see that this month, 21% of the homes that sold were short sale properties. 26% were foreclosure properties, and 53% were conventional. So we're still seeing over half of the homes that are selling being sold conventionally. That's good news for the county in general, but that's still an awful lot of homes that are going through the foreclosure and short sale process. Now, if we compare that to last month, 19% of the homes that sold were short sale properties, 25% were foreclosures, and 56% were conventional sales. Given where we are right now, where a lot of folks consider this a market that has stabilized to a certain degree, inventories are way down, demand is up, prices are up. Buyers have less time to fool around. Remember, last month it was at 2.8 was the ratio. Another way of thinking of that ratio is sort of a competition index. For every home that sells last month, there were just shy of 3 properties on the market. Well, this month for every home that sold, there were just shy of 5. So we're seeing that pendulum swing back, at least in January, to favoring buyers more than sellers. And given the amount of short sales and foreclosures, and we're seeing short sale foreclosure situations now where people just pounce on them as soon as they come up, which indicates there's not as much stock out there, not as much inventory out there as many folks would like or who are out there shopping. It's going to be interesting to see what happens when we start seeing more of those short sale and foreclosure properties introduced to the market. Let's see. So there were a total of 617 homes sold. There were 129 of them that were short sales, 161 that were foreclosed, and then the remainder, 327, were all conventional sales. Now let's take a look at home prices. This has definitely gone on a bit of a roller coaster ride. Just like if we were at Great America and heading up that first big dip, we slowly rose all the way up to 2008 and then suddenly had that big drop off in 2009. I think we're all familiar with that time frame. A lot of things were going on then to bring those numbers down. Now, the average sale price currently stands at $666,729 in Santa Clara County. The highest priced home was at 15820 Viewfield Road in Montessorino. That's just between Los Gatos and San Jose and Saratoga, right in that ballpark area. If any of you have driven through there along Saratoga Sunnyvale Road, or Sunnyvale Saratoga, depending on which end of town you're coming from. That property sold for $5,500,000. It was originally listed for just shy of $8 million, $7,999,000. It was on the market for 152 days. So we are obviously seeing some activity at the higher ends. We're still seeing some properties getting sold, up there. We actually saw a net increase in average price from 2009 to 2010. The lowest priced home was at 222 Loop Court in Gilroy. That property sold for $155,140. It originally listed for $139,900. So it did sell for more than it was listed for. It was on the market for 13 days. It was a bank-owned property, and it was in crappy shape, horrible shape. And it obviously got multiple bids because it sold for more than asking price. But at that price, it's even for Gilroy, that's pretty hard to argue with. Now, what was the change from 2009 to 2010? For the month of January 2010, we saw an increase of 18.7% between 2009 and 2010. That's a pretty healthy increase, particularly when you consider this is the county we're talking about. That was a dollar value increase of $105,018. Where do we think this is going to go in the future? Well, that's a tough call. I think in the near term, January, February, March, it wouldn't surprise me if we continue to see these numbers, if not remain flat or steady, increase a little bit more. But eventually, when all those foreclosures hit the market, this number is going to have to go down. Remember, the last time we saw inventories jump up because of foreclosures or short sales, eventually prices had to come down to make those properties get sold. Same dynamic is at work here. It'll be interesting to see where this goes and what happens with these properties. Who knows? Maybe the banks will be smart, but they're trying to figure out the math. How can they drop these properties on the marketplace in a way that nets them the greatest amount of money? But they also have to weigh that against the fact that for banks, property owned is a bad thing. It's not considered an asset. It's considered a liability. It affects directly their rating. And if they hold this property too long, their rating will get reduced. And if their rating gets reduced, what they pay for money from the Fed is affected negatively. So it could end up being a much bigger loss for them to hold on to these properties and hope for higher prices in terms of the cash that they can get their hands on, as opposed to just getting rid of these properties as soon as possible and writing them off. Okay, now let's take a look at home prices again, this time recent months, just to sort of get an idea of the trend. This is a nice sort of laid out graph here. It gives us an idea of where things have been moving. We've seen a dip in the January, February, winter time frame last year. We're getting that the same sort of thing this year. You usually see that in the winter months when things start to dip. People who really need to get those properties sold wintertime, there's fewer buyers out there, so usually it's a little more competitive. We didn't see that this year. We saw actually a pretty good ratio in December, but we still saw a decline in average price. We peaked out in November. We've declined the last 2 months in a row, which was, let's see, from December to January, we had a decrease of 5.33%. That was a dollar change to $37,551. What will we see moving forward? Well, last year we saw decreases over January and February, and then we saw things start to ramp up in March and April. If normal market forces are in play and things sort of remain as they are in general as far as trends are concerned, I could see the same thing happening. We could see a ramp up as we get further into the year. The problem here is I think there's a good probability that we're going to see a lot of foreclosures coming on the marketplace that could throw a wrench into that trend. So we'll have to wait and see what happens there. Now let's take a look at days on market. We can see it's down from last year. It's actually down 39.25%. That's 42 fewer days to get a home sold in 2010 than in 2009. The market really reflects that. If you think back to last year around this time, we were seeing Huge, much bigger inventories than we see now, and we're selling things relatively quickly. Folks are out there really trying to take advantage of short sales and foreclosures, and things are tending to move a little bit more quickly. The market is definitely more competitive right now. Now, if we look at the same numbers, just laid out just going chronologically straight back, not looking just at the same month in past years, we can see the trend has really been sort of going down ever since January of 2009, where we peaked. We've definitely had a steady decline in the days on market. We sold off a whole lot of that extra stuff that had been out there. You can see where we get little peaks in the days on market numbers. That's most likely a reflection of the fact that we're digging a little deeper into the inventory that we have and selling off properties that have been on the market for a very long time. And it's been relatively flat now since October-November timeframe. Interesting to see where it goes from here, but again, this will obviously go up if the inventory numbers start to go up again. Right now, we're seeing robust enough sales that I don't think we're going to see a dramatic increase in this particular number. Now, from December to January, we saw a 1.52% decrease in the days on market, and that was a change of 1 day. So it took 1 day less to sell a home in January than in December. Now, I do appreciate you taking the time to listen to these presentations. I hope they are helpful for you in making your real estate decisions. Here's all my contact information once again. I won't read through all of this stuff again. I did so at the beginning of this presentation. I'm just presenting it here again in case you'd like to jot it down if you'd like to get in contact with me. Thanks again for listening, and I will talk to you all next time.